Howdy, everybody. Welcome to Liberty Call. Today is Wednesday, May 28th. No, I'm sorry. It is Thursday, May 29th. Sorry about that. Hope everybody's having a fantastical day out there in the interwebs. It is another gloomy day here in Colorado. But before we jump into all the news for today, I got all flustered and said the wrong date. Duh. Anyways, yeah, markets are up with the news last night that the one of the courts was going to block the tariffs. So we'll see what happens there. And there's a lot of other news going on today. But before we jump into everything, if you could do me a favor, give me some thumbs up, a like, share, subscribe, follow, and press the notification bell. All righty. Let's get into the markets for today. So Dow Jones finished the day up 0.28%. It was up way higher in the futures last night after the news came out. It was up 117 points, closed at 42,215. S&P 500 up 0.41%, 24 points, closed at 59.12. NASDAQ up 0.39%, 74 points, closed at 19,175. The VIX was down 0.67%. It's at 1918. Canada down 0.28. Brazil down 0.25. And Mexico down 0.26. Headed over to Europe. Germany, lots of red here. Germany down 0.29. The UK down 0.11. Same with France. The Netherlands down 0.02, Spain up 0.11, Italy down 0.36, Switzerland down, they were closed, and Portugal up 0.2. In Russian exchanges, the MOEX was up 0.89, the RTSI up 2.31, and the Asian markets overnight, the Nikkei was up 1.88%, Australia up 0.15, New Zealand up 0.01. In China, the Shanghai was up 0.7, Shenzhen Component up 1.24%, China A50 up 0.06, DJ Shanghai up 0.82, Hang Seng up 1.35, and the Taiwan weighted was up a tenth when it closed on the 28th. All right, so that is some good stuff in there. Let's get to the market recap and see what happened today. Because we had the market minutes or the Fed minutes came out yesterday. Everybody was all on jitters for that. And then, like I said, the court came out and said it was an international trade court or something like that. I'm sure we'll cover that in just a second. So let's jump into this article. U.S. stocks were mixed Thursday as early gains faded following a court ruling that blocked for President Trump's proposed trade tariffs. The ruling, which found Trump overstepping his authority under the International Emergency Economic Powers Act, initially boosted optimism, but quickly gave way to renewed trade uncertainty as the White House appealed the decision. Despite the volatility, Nvidia's strong earnings helped support the broader market. The chipmaker reported robust demand for AI and data center products, offsetting concerns over an $8 billion sales hit from new U.S. export controls on China. Nvidia's results reassured investors about continued AI infrastructure spending. Tesla rose after Elon Musk stepped down from his role in the Trump administration, and Kohl's gained on a smaller than expected loss. Best Buy, however, fell after slashing its 2025 outlook due to tariff concerns. Economic data showed the U.S. economy contracted by 0.2% in Q1. We'll get to that report in a minute, with unemployment claims rising and labor markets showing signs of softening. Oil prices initially up on the court ruling and a surprise draw in U.S. crude inventories reversed course during weak GDP data. Brent and WTI crude each dropped about 1%, reflecting broader concerns about demand from the world's largest energy consumer amid economic uncertainty. All right, so things are just as confusing as they were last week. All right, let's dive into the report here about the oil. EIA Crude Oil Inventories report reveals surprising drop, bullish for crude prices. Remember last week they were surprised that there was a surprise gain or what do they call it, build, and this week it's a surprise draw. Weird. It's like they don't have a clue what's going on. All right. The latest EIA report revealed a sharp and unexpected decline in U.S. crude oil inventories, signaling stronger than expected demand. Commercial crude inventories fell by 2.798 million barrels, a stark contrast to the forecasted increase of 1 million barrels. The unexpected drawdown suggests tightening supply conditions and has bullish implications for crude prices. This week's decline also reverses the previous week's trend, which saw an inventory build of 1.328 million barrels. The dramatic shift highlights a sudden surge in demand or potential supply disruption, which could put upward pressure on oil prices. A decrease of this magnitude is typically interpreted as a sign of that consumption is outpacing supply, a dynamic that can raise inflation concerns if sustained. My question is, they didn't see this last week? I mean, what changed in 7 days? I mean, yeah, we had the holiday weekend, but I can't imagine that, people drove or flew that, it was that dramatic of a difference. So anyways, getting back to this, the inventories figure is a key metric for oil traders and economic analysts alike, as it reflects broader supply demand trends in the energy market. A continued drawdown in inventories could influence the price of gasoline and other petroleum products, ultimately affecting consumer prices. Given the surprise nature of this report, market participants are likely to scrutinize future data releases more closely. This drop could mark the beginning of a trend or a temporary anomaly, but in either case, it has the market's full attention. And my security team back here is wanting to fight and wrestle. Hang on a second. Hey. Stop. Anyways, all right. Young staff. Anyways, all right. Well, we got the research report here, or from First Trust, first quarter GDP, the preliminary or the second preliminary report put together by Strider Elas. Let's read through this real quick. The most important takeaway from the latest economic report isn't GDP, it's corporate profits. Economy-wide profits declined 2.9% in Q1, or 3.4% excluding the Federal Reserve's losses, though still up 3.6% year over year, excluding the Fed. This is the weakest growth since 2020. Domestic non-financial industries led the drop, and foreign profits fell too, signaling broader corporate stress. These numbers suggest stocks remain overvalued based on capitalized profit models. Real GDP for Q1 was revised slightly upward to a negative 0.2% annualized rate, thanks to better inventory, government, and business investment data. However, core GDP, which strips out volatile components, was downgraded from 3% to 2.5%, still positive, but still the slowest in nearly 2 years. Consumer spending, a key driver, rose just 1.2%, its weakest pace since early 2022. Inflation remains sticky. The GDP price index stayed at 3.7% annualized rate, with prices up 2.6% year over year. Slightly hotter than the Q1 2024's 2.4%. This challenges the Fed's inflation fight, but may still allow for modest rate cuts later this year. Meanwhile, jobless claims rose by 14,000 to 240,000, suggesting a cooling labor market. The M2 money supply grew by 0.7% in April, up 4.4% year over year, still below historical norms. Manufacturing activity slightly or improved slightly, with the Richmond Fed index rising to a negative 9. All right, so it's always excellent when the money supply keeps growing, because then all that does is deflate our. Oh my God, the sun's coming out. Oh, weird. It's been gloomy all day. Anyways. All right. Well, we got one more article here, just some food for thought. Here's how a cashless society will impact the world. This comes to us via LouRockwell.com and was authored by Mr. Clark Barnes. So let's see what he has to say about this. All right. All right. As the world moves towards a cashless society powered by government-backed digital currencies, individuals may face alarming risks to financial freedom and daily survival. This shift eliminates physical money, replacing it with centralized electronic accounts, meaning access to goods and services becomes fully dependent on digital systems vulnerable to disruption, censorship, and manipulation. Threats include cyber attacks from both foreign governments and independent groups that can crash central banks and or steal funds, leaving people unable to make purchases for days or even weeks. A growing concern is the imposition of merchant category codes or social credit scoring, where transactions are tracked and potentially restricted based on behavior or political views. Who would want to do that? If paired with centralized digital currency, access to essential goods like food, gas, medicine could be revoked for non-compliance with government mandates. Remember the vaccine stuff a few years ago? Further complicating matters, AI and surveillance technologies can analyze spending habits and political affiliations, leading to algorithmic blacklisting without warning. To safeguard against these risks, the article suggests practical steps: diversifying funds across banks or card providers, keep prepaid gift cards, maintain a paper address book, and use communication tools that work without mobile networks. Bartering is highlighted. Bartering is highlighted as a key fallback. Building local relationships or having useful skills or goods to trade can provide critical access to necessities during disruptions. Ultimately, the transition to digital-only currency systems carries profound implications for privacy, autonomy, and resilience in times of crisis. Proactive preparation is essential to avoid being at the mercy of opaque systems and policy shifts beyond your control. I wholeheartedly agree. I mean, it's nice having, digital everything where you can just take your credit card and tap it on something or move money with your cell phone or whatever. However, those are dangerous things. Being able to have access to, real money, gold, silver, paper, and being able to exchange that freely is, in my opinion, what is important to liberty. So, all right. Well, that's everything that I got to cover for today. So if anyone needs anything from me, where do you want to go? DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. Be happy to help. As you can hear, my security staff is getting grouchy. They want to go out and play and get some exercise. They've been trapped inside all day with the rain. So I'm going to go ahead and take care of that business here in the very near future. So hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.